Jerry D'Ambrosio. Jerry has been here for 13 years. Jerry D.
Glenn, let's start with EIGI first.
All right, let's go to EIGI.
Okay, and this pick, guys, is just a classic resistance breakout. Price is obviously in candlesticks. You have a support and resistance that Glenn has put on the chart. What he's hovering over now was support. And at that support level, let's go down back to support. At that support level, you could see three very clear retracements. Okay, almost a little triple bottom here. We're looking at a 1-year graph. I would consider that at least a double bottom, more so a triple bottom. Yeah, most recently at the end of August, middle of August, you had your third retracement off of that support level. Okay, that would have been a great time to buy. So what I'm doing here, guys, is I'm kind of doing two things. I'm teaching you, how to take advantage maybe of the next support retracement that you see, and also giving you a stock, in this case, EIGI, which I think is an excellent candidate today, because what it's recently done, not only has it retraced from support about a month ago, it is breaking out through a pretty significant resistance level there. And if Glenn hovers his mouse over that, you had a couple of touches right in that. What price is that? I can hardly see that.
That's at $5.79.
Right, so yesterday's price action broke through that resistance level, which is very bullish. And today we're getting follow through, even more bullish confirmation of that resistance break. What I like about this stock, not only is it breaking resistance, but go back to a 1-year chart. It doesn't look like we have resistance again until $8.05. So I think there's a lot of upside here. I really love the 4 or 5 months there of channeling, breaking out yesterday, following through today, a ton of upside all the way up to right around $8, which is the next resistance level. So this is a pick, guys, that I think is suitable for today, viable for today. And what do we have now? $6 price. Zoom into the more recent time. And let's just go to a 1-day chart, Glenn. All right, so here's a 1-day chart. Stock is just recently pulling back. We're just looking at 1-minute price bars. It's late in the day today. It's 2:43. I'm not sure if you would buy this yet today. Go back to a 3-month chart. So yesterday we had the breakout. Yesterday's breakout resulted in a high price of $6.04. So you saw the breakout yesterday. You liked the price action. You wanted to get into the trade today. You waited for the stock to go above yesterday's high of 604. Like Steve said, it's a lower dollar stock, so maybe you put your buy stop order in at 608. You for sure got filled today, and you're a little bit in the red, but you're still in the trade, again, with a ton of upside.
I like from the perspective of, the channel bouncing out. That was a significant channel. It got touched twice at the resistance, got touched 3 times at support. That's clearly saying there's a change in sentiment in the stock. It was sideways, it was indecision, it was up and down, up and down. Now the up and down days are gone away. It's like happy days are here. Yeah, happy days are here again after the stock went sideways. So I like that, and that's early. How many times have you heard someone say, man, I want to get into that stock at a good early point? This could be with a nice upside up to about 8. This gives you a good profit target on the trade.
Yeah, that's what I loved about it the most, is the upside potential at the next resistance level.
And even at the low, when you take it, I mean, that's a big channel. That was a juicy triple low.
Absolutely, yes, it was.
Yeah.
Jay says, good find, Jerry. Did you use a search to find that one? Yeah, price breaking resistance, Jay. So in our Unisearch tool, if Glenn goes there real quick, in our Pro Trader folder, we have a search called breaking resistance. I might have made a tweak or two to it, but I'm pretty sure that that's the search that I used, price breaking resistance. Okay. Next one is IART. Now this is a little different. What we're looking at on the chart, obviously price is up at the top in candlesticks. There's two purple lines almost. Let's change one of those colors, Glenn, if you don't mind. Glenn is changing the 50-day moving average to yellow, so everybody can see the difference between the two. So the yellow moving average is a 50-day simple moving average. The purple moving average below it is a 150. And the indicator at the bottom is stochastics. So about a year or so ago, I was part of creating a course, a new course that we launched last April called Swing Trading with VectorVest. We invited our managing director from our UK market, Dr. David Paul, over, and him and I taught that course here. And I developed this little technique for that course. So basically what we're looking for is, zoom in there so everybody can see it on the more current time frame.
You want a 1 month?
3 month is fine, just so everybody could see price action a little bit better. So what we're looking for is an uptrending stock, and we want to take advantage of a retracement or a pullback within that underlying uptrend. So 50-day moving average is above the 150. Both are sloping upward. And a big part of this system is the separation that's being created between the two moving averages. Okay? So put your date arrow on August 30th. Put your cursor on August 30th. That was about 3 bars earlier. So one day after. So on August 30th was an entry. And let me explain why we entered on that day. You had price just recently hit a new high back in July, retraced, moved steadily lower towards the 50-day moving average. You could see where it stopped, though. It stopped right at that 50-day moving average a couple days prior. Price is above the 50. Both the 50 and the 150 are separating nicely, letting us know that we're in a nice, strong emerging trend. The stochastics oscillator, the price broke down enough there at the end of July in August to cause stochastics to go below 20. So what we're looking for here is a retracement off of the 50-day moving average and the stochastics oscillator crossing from below 20 to above 20. That happened on August 30th. That was our entry into this trade. So are we a little late? I don't know if we're a little late. We're approaching the most recent swing high. But this, guys, I wanted to treat more as a teaching moment than necessarily here, go buy this stock tomorrow. So we had that retracement on August 30th, and as you could see, that was a couple of days off of the 50-day moving average kiss. Now, I know what you see. You see price falling for the next 2 days. Probably wondering, well, would I have gotten out of the trade? Should I have gotten out of the trade? When you're going to trade something like this, a 50-day moving average retracement, it would make sense to use the pivot or the kiss of the kiss bar of the 50-day moving average as your exit. So as you see price rose off of the 50-day there for a couple of days, you entered. Put your mouse, Glenn, over the low of the green bar, 2 green bars prior to our entry. Right there. So the low on that day was 58.10. So as I see price falling for 2 days after I buy it, I'm a little concerned, but I'm going to use that low price. I'm going to use the low of the kiss bar as my exit. And you can see price never fell below the low. So the uptrend there stayed intact and price took off from there, giving us a nice profit potential. Stochastics is currently rising. Price is still above the 50-day moving average, approaching the most recent swing high. So you may be asking, well, if I'm in the trade or if anytime in the future I trade something like this, where should I start thinking about taking profits? At the most recent swing high would be where your initial profit taking would take place. You can take half the position off at the most recent swing high, let the rest run. So that's kind of where we're at now. If we would have entered on August 30th, we're almost in profit-taking a situation currently.
I'm going to start because I think that this is where the power and the flexibility of the tool and the differences in how we do things comes into play. Utilizing moving averages like a 50 and a 150, from a trade perspective, you might say, that's a big moving averages. But you know something? as Jerry explained it, and understanding how to use those moving averages makes a difference than just taking it at face value and saying, that doesn't seem like that's a trading kind of scenario. So I like that. And the rules that he has in place to make the trade, it's all about planning the trade the plan, without getting nervous, without making an emotional decision and go, oh my God, it fell for 2 days, what do I do? What is the plan? Knowing where you're going to get out is important. And I love using stochastics. I'm not a big fan of stochastics, personally, but moving from being oversold to now rising up, that was a good looking trade.
Yeah.
Steve?
Nothing to add, really. I thought he covered the bases well here. Yeah.
And this, by the way, thank you. This, by the way, so that course, Swing Trading Success with VectorVest, this technique was built into this course. It's actually called Jerry's Gems. It's a little search that a little scan that I came up with for that course in particular. Not everybody has it, so you might be wondering, why don't I have that search? That particular search that I'm teaching you here, or that technique that I'm teaching you, was taught at our Swing Trading Success workshop that David, Paul, and I did a little over a year ago. And the next stock is very similar. So if Glenn goes to FSS, very similar. So if, let's just look at a 3-month chart. All right, and change one of those moving average colors.
Let's change
the 150. That's
150.
fine. You can make it yellow as well.
I was already going to do that,
There we
Jerry.
go.
I didn't need your insight. Guys.
Okay. All right.
I'm a big boy. I can handle it.
All right. So let's go. Let's go a little bit more than 3 months. I want everybody to see kind of price. That's fine. So similar situation. End of July, price made a new high, pulled back towards the 50-day moving average. And what's pretty cool here is, as the stock was pulling back towards the 50-day moving average, there was actually separation being created between the two moving averages, which really told you that you're in a nice, strong uptrend. I know the stock is pulling back, but it's, you know, buying the dips. You've heard buying the dips before, right? That's a little easier said than done, because you don't know when the stock is going to stop falling and start going up again. So what we wait for is the kiss of the 50-day, which happened, great, Glenn, thank you, perfect, 828. The low was actually, I think, right on that 50-day moving average. So recent new high in July, pull back towards the 50-day. August 28th was the kiss of the 50-day moving average, okay? That's not where we enter, though. The trigger to get into this trade is when the stochastics oscillator goes above 20. That happened there. That happened on August 30th as well. So you had a 2-day retracement off of the 50-day moving average. You also had the stochastics oscillator going from below 20 to above 20. There's your entry. And same with as with our IART, the KISS candle, if Glenn will zoom in a little bit, the low of that candle of 28.41 is my initial stop. So if I'm in the trade and I'm wrong and the stock goes the other way and starts to break down, I got a really tight floor there to protect from a large loss. The stock did go down the next day, right?
After entry.
Yeah, after entry, the stock did go down the next day, but as you can see, has retraced nicely from the 50-day moving average. And we're in a similar situation where we might start thinking about taking profits now, because we are right at the most recent swing high. Let's go to a 1-year chart.
Which would be about 32.71.
Okay, so that's really the most, only resistance level that we see there is at the most recent high there.
Again, from a technical standpoint, I think that's very well explained, and I like it.
What I'm seeing on Jerry's stocks, whether he's using support and resistance or the moving average as a support and resistance, that it just hammers home. Steve and I were talking before we came on. We worked on the trading desk, and it was all about where are the buyers, where are the sellers, where's supply and demand. Demand held up on the 50-day moving average, and in the earlier stock, it broke through resistance because supply had cleared up, and the stock rises. So however you choose to use them, and Jerry, I even begin to explain it as clearly as Jerry just did, but it's still a big deal to me how that supply and demand comes into play.
Yeah.
And you just illustrated it perfectly.
Thank you.
All right.
One of the things that I like most about what Jerry did is he gave you definable ways to set your initial stop loss. And Jim Penna has always said it best, coming from the trading desk. Risk management starts when, Jim?
At order entry.
Right.
Right.
So you got to know that before you step in. And I thought that was well done.
Thank you. And I know a lot of you folks out there struggle with that. You know, you tell us a lot, you know, in some of our webinars, you know, when do I get out? Or if I get in at this price, what price do I get out at? And systems like this, systems like what we teach at our Trade Like a Pro course, Steve and I, we clearly define entries and exits. There's no wondering what to do moving forward, okay? Because you always ask yourself, what do I do? We get asked that question, what do I do now? I'm in the trade now, what do I do? You should know what you are going to do no matter what's thrown at you. And again, a lot of the techniques that we teach you in swing trading course, Trade Like a Pro, we kind of lay all that out for you.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.